Hi guys, welcome back to the channel. If you are new, please hit the subscribe button. That's the only way that you're going to get notified when we post future videos. Like this video, that's the only thing I'll ever ask you to do. I've got tons and tons of knowledge and stuff that I always sharing on this channel and on the blogs for free. You don't pay for anything. If anybody ever asks you for money or to send them money on this channel, know that it's not me. So all you can do for me is to just like the video. Thank you if you did like the video. Now I already said, if you're looking to download forex robots, indicators and stuff like that, there are links in the description box below. Visit those two blogs and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below, and I'll try my best to try and find the stuff that you need on your behalf. Just be patient, because some of these things I need to pay for them, which is why you also need to promote this video, so that I can get enough money to buy these things from people that are selling them, so that I can share with them with you for free. Okay, so I usually get asked what are some of my tips when it comes to trading volatility, especially volatility 75. But you can use these tips to trade all other indices, synthetic indices, not just indices. We are talking about synthetic indices, your boom and crash, your step index, your high frequency index, but particularly the volatility index, Vix 75, Vix 100, Vix 50, Vix 20, is it 25 and 10, I don't know. But what are some of these tips that I can give a person who is looking into trading of VIX? I think first of all, people have got this misconception that you need to have these special different skills that you are going to need to be trading VIX. If you are coming from a forex trading background, if you're coming from trading currencies, Euro USD, gold, GBP USD, GJ and stuff like that, you are in a better position to trade these synthetic indices, because most of the time trading these synthetic indices is nothing more than trend following trading. You're just following trends. That's basically what you want to do. You want to basically spot areas where the instrument has been oversold or has been overbought and is now turning, and the trend is taking off. Then you can join that trend and just ride that trend and you go with it. And you notice also that support and resistance stuff, your basic support and resistance stuff, supply and demand, it always works also on these synthetic indices. The levels are always so visible. I previously said in the previous videos that the good thing about synthetic indices is there's no manipulation like you always find with currency trading. So you find that the support and resistance levels, they are usually visible on most of the time frames, and sometimes or most of the time they do hold. If it's a good support and resistance level, it does hold. So let's get into some of the tips that I have for you concerning trading VIX. Okay, number one, I think this also works with trading currencies. Like I said, if you are trading currencies, trading VIX or volatility index, whether you're trading the 75, the 100, the 50, is not much different from what you were doing with currencies previously. So number one is, don't go against the trend. Don't go against the trend. I think this is true in all markets. It's true in currency trading, and it's true with synthetic indices. don't go against the trend. If you notice trend exhaustion, maybe you can then try to go against the trend, but you need to be confident in your ability to spot trend reversals and trend exhaustion. But otherwise, whether you are trading with the 4-hourly or the 1-hourly, the 15-minute, or just be aware that you are not trading against the trend. Otherwise, you'll be caught out and you lose a lot of money. And unlike in currency trading, it just happens like that. That's these synthetic indices, you can make a lot of money just like that, but you can also lose a lot of money just like that. So first tip is, don't go against the trend. Stay safe, be safe, go with the overall trend, the higher time frame trend, whether it's 1 hour, whether it's 4 hour, or the daily, but determine the bigger trend. Where is it going? Is it buying? Is it selling? If it's selling, then only look for sales. If you are going to buy the reversals, know that you are buying a reversal. You are not buying for a very long time. You are just getting in and getting out, but otherwise you are looking for sales. Tip number 2, which also is true concerning any kind of trading, also currency trading, is don't be greedy. Don't be greedy, guys. You'll be tempted because, like I said, these synthetic indices, they move fast, and you suddenly see you've made a lot of money, and if you are not careful, you end up wanting to become a billionaire that very day, getting in and getting out of trades, doing all these things and making a lot of money. The problem is you certainly start setting yourself up for disaster. When greed steps in, then you are no longer analyzing, you are no longer approaching the markets with a sober mind. You now think you are the master of the markets. Usually when you start thinking that you've mastered the markets, usually that's when people blow accounts. Don't be greedy. Don't be greedy. When you see the markets moving in your direction, it's all good and fine, but when price has reached your TP, close your trades and call it a day. Call it a day and go and do something else. Don't marry the market. Don't try to make as much money as you can in the market. Sometimes things will not go your way. You might have the best analysis, you might have, but sometimes for some reason, sometimes things will just turn on you. So you don't want to be greedy. Don't be greedy. Set your entries, your take profits, your stop losses, and stick with them. Once you have made your money for the day, your daily target, everyone is encouraged to have a daily target. Once you've made your daily target, that's it. Close your charts, go and do something else. Usually when you try to make as much money out of the market is where you start blowing accounts. Tip number 3, if you must go against the trend, this is synthetic indices. If you must go against the trend, always make sure and be confident that you are in the overbought, oversold levels, that the market has extended itself so much that it has got no choice but it has to reverse. So you need to dust up on your ability to spot reversals, trend exhaustions, and stuff like that. While most of us, tip number 4, while most of us we are going to be trading these synthetic indices on 5-minute and 15-minute, when it comes to boom and crash, you find some most of the time people are trading the 1-minute. Whilst you are trading these lower time frames, be aware of what is happening on the higher time frames, your 1 hour, your 4-hour time frame. Be aware of what's happening there. Then you can drop down and take your trades on the minute, the 5-minute, the 15-minute, or the 30 minutes. But usually people take their trades on the 5-minute and the 15-minute. Those are the usual popular time frames for entries. So your time frames, your entries, it's usually 5-minute and 15-minute. Boom and crash, people usually go down to the minute, but you can still use 5-minute and 15-minute. Then just be aware of what's happening on the 4-hourly and the 1 hour. Tip number 5, it also goes with currency trading. Don't try to force trades. This has bent many people's hands. Don't try to force hands. Volatility index will humble you. Don't try to force trades. If you are trading M's and W's, if you are trading support and resistance, if you are trading whatever, if there is no setup, if you are looking for engulfing candles, if you are looking for whatever pattern that you're looking for, maybe you're looking for flags, maybe you are looking for wedges, whatever you are using for your entries, if it's not there, just close your computer, your phone, and go into something else. Then come back later and see if that setup is there. I've seen people blowing accounts simply because people have got no patience. Then they try to force trades that are not there. That's the easiest way to get your account blown. Then tip number 6, I cannot emphasize this harder. Guys, money management. I think it goes with all that I've been saying prior to this. Money management, it's important because we said these synthetic indices, they are so volatile, they move so fast. If you are going to put all your eggs in one single trade, you are playing with fire. Make sure that you are not risking your whole account. You might have the best analysis in the world, but sometimes things happen. You might win 10 consecutive trades, but you don't want that 11th trade that's going to go against you to be the trade that destroys everything. So money management, stick with your money management. If you are using 0.001, for example, with VIX, you can use 0.001 or 0.10 with other VIXs, or whatever format lot sizing that you are using. I suggest that you stick with that. How much, whatever money you are making, gradually, maybe after doubling your account or tripling your account, then you gradually slowly increase your lot sizing. Then you can add more to your positions and your lot sizing. Money management is important. Don't just let the market take your money. They will let you win 15 trades, 15 straight trades, you'll be winning. That 16th trade will take you out. Don't be that person who wins 20 trades and the 21st trade takes their whole account down because they don't know money management. Then 7th tip, don't trade all the time and anytime. Choose your trading times. Find times where you are most comfortable and where you have observed that you are most profitable. Don't just trade all the time you are just trading. Exhaustion is going to lead you to start making mistakes, because you're just glued to the markets and you're just trying to make as much money as possible. That's how you are going to start making mistakes and how you are going to lose money. So don't trade all the time and any time. Determine whether what time best suits your trading style, what time best suits your work lifestyle balance. And when you're trading, you probably already know that the hours between this hour and this hour, I'm usually so profitable because you're fresh and you're concentrating and stuff like that. Only trade those hours. Don't try to trade 24 hours a day. You cannot do it. You cannot make trillions overnight. Okay, so those are some of the tips that I can give to somebody wanting to trade volatility index and all the other synthetic indices. And I think some of these tips also apply to people trading currency pairs. So yeah, I hope this helps you. Leave a comment in the comments section below. I'd like to read your comments, to hear your thoughts, and if you have questions, leave them in the comments section below so that I can make videos answering those questions. Subscribe if you are not yet subscribed. Like this video. Until next time, bye.